Hi everyone, and most welcome to today's lecture where I will give my view on the global economic outlook post-COVID era. We have seen that new virus variants are coming in to not least Europe. The Omicron variant of the virus is now the epicenter in Europe. What does it mean? Will it harm global growth? And where do we see challenges, opportunities, a new business landscape in the new area is actually what we see ahead. How will it look like? My name is Lena Sellgren. I'm the Chief Economist and Head of Research at Business Sweden, the Swedish Trade and Invest Council, and I hope to give you some insights that will be helpful for you today. So looking at the global economy, there is a strong recovery, a strong momentum in the global economy, but the pandemic is not over. And we don't know actually how the spread of the new variant will enter into our societies. If we need more of restrictions, that's what we see right now, not least in Europe. But hopefully we don't have to close down our societies. The lockdown situation is hopefully not where we will end up. So hopefully we can have societies open, but of course the service sector will be hit again harder than the industrial sector. It seems that we can continue to trade our industrial production globally without bigger disturbances. So looking at the global economy. If we look out in the global economy, we know that last year, 2020, the global economy fell by approximately 3.5%. This year, we expect that we end up with about 6% growth globally, and next year, almost 5%. However, looking at the map that you have in front of you, you can see the recovery rate. We calculate this by our forecast for this year compared to prior to the crisis, 2019. Have economies recovered fully or even more, which means are they back at pre-crisis levels or more than that? If you look at the orange color in the map, you can see that North America, excluding Mexico, is already back on at pre-crisis level. It's the same for large part of Asia, but not for some of the Southeast Asian countries. And then you see a mixed picture in South America, Africa, Middle East. I will be back to Europe. And it all depends on the vaccination degree, the coverage of vaccination. Some countries, markets do have a very, very low coverage of vaccination, which means that you need to have more restrictions into your societies, and then you will not see growth to the same extent. It will take longer time to recover, and that goes for Europe as well. If we look specifically at Europe, you can see that it's more or less blue, except for up in the north, the Nordic countries. And actually, Europe as a region was hit quite hard during the pandemic. In total, the European economy fell by a bit more than 6%, so it will take a longer time to recover, even though we see that there is a lot of fiscal stimulus into the economy, loose monetary policy as well, so there is support for growth, and this is for the long run perspective as well. Where we in Europe have investigated quite a lot to support investments onwards in digitalization, the green transformation, the next generation EU, and also the budget for the longer perspective. So it's a lot of measures coming in and support from fiscal policy in Europe, but we have to wait until next year before Europe as a whole is fully recovered, back at pre-crisis levels in 2019. So what we can see if we move on to next year, 2022, is that most economies globally will be back at pre-crisis level or even more, which is amazing. If we go back to the second quarter in 2020, the start of the pandemic, we could not imagine that in a year we will have a vaccine that we can use globally, even if it's unevenly spread. So that's one reason why we see this momentum and strong growth coming back. So next year, as you can see, more or less all economies globally will be at least back at pre-crisis level, and this goes for the whole of Europe as well. So this will help, of course, for the global recovery. And just to mention again, at globally we have a lot of support from monetary policy, fiscal policy, and we do believe that most central banks will be very careful before they start to raise rates. The Federal Reserve in the US is of course ahead, and I will be back a bit more on risks and inflation picking up quite fast right now. Will this be permanent increase in inflation, or is it just more of a temporary effect? That's what central banks are looking a lot into right now, and the financial market as well. It's hard to really understand what's happening when it comes to price increases and wages as well, and will this be more of a permanent increase in inflation? Then central banks will be a bit afraid of being lagging behind the curve. So then it could be that they have to increase interest rates somewhat earlier than communicated today. And it goes with the purchases of government bonds and bonds as well. So that's where we what we keep an eye on right now. But if we look at this, I think it's an optimistic view that we have, or a recovery well on its way. But as I said, the pandemic is not over, and we don't know exactly where we will end up with this. But what we can say is that we have lost probably a permanent loss in the global economy. If we calculate this, we did this at Business Sweden. We look at the trend growth, so we look ahead. If we haven't had this pandemic, what growth should be expected globally? And then you can see the dotted line, it's the trend, and the other is the global GDP, our forecast. And you can see that they are narrowing, of course, because we have the recovery, but we still believe that we will have a permanent loss of about 1% globally. And this is uneven spread if we compare emerging economies with advanced economies. Advanced economies have a higher coverage of vaccination and also more of stimulus, the possibility to stimulate economies even more. So they will recover faster than emerging economies and probably more or less be back at the trend growth as we see it right now. But for other parts of the world, like the emerging economies, we will have a permanent loss of somewhere between 3-4%. It differs, of course, between different markets. But if we look into the future, of course, there could be productivity increases that could come from taking advantage of emerging technologies, AI, etc., robotics, or using this in a very smart way with digital platforms and scale up this, which could mean that we gain productivity, and then we could, of course, have a steeper curve and take back what we lost during the pandemic. But we are not there yet. But hopefully, if we collaborate globally and find the solutions for a better future for all, moving into a more digital society and also adapting with a green transition, then there could be productivity gains. So we hope for this. So looking at the world trade, I think this is one of my favorite graphs when we look at the global economy and trade, not least. So what we saw during the pandemic was actually that trade was not hurt to the extent that we thought when we were in the beginning of 2020 and didn't understand the effects of the pandemic, this huge spread of the virus globally. So we expected to see more of disruptions in supply chains, but we didn't. As you can see in this graph, start to look at the bars and then you look to the left-hand side, the left axis, where you have the percentage growth. So you can see every month since year 2000 how our trade, global trade in goods has developed. And then you can see in the end of the graph in September 2021, that's the latest figure, the data that we actually have right now. You can see that it has normalized a little bit. So we are back at a growth rate of approximately 5% globally. But looking also at the graph on the right-hand side, it's an index. So go back to 2010 and put this to 100, you can see that we have really recovered very well in the global trade. And global trade in goods were actually back already in the autumn 2020. So global trade has performed quite well, and that's really good for Europe, not least the Nordics and the Nordic Sweden. Small open economies, very dependent on trade, which means that it's necessary to keep borders as open as possible and free trade as much as possible, because we do have a lot of export and import as well. So trade and foreign direct investment is very, very important for not least the Nordics, but it goes for the whole of Europe. But if we look at this graph a little bit more, you can see I put it until 2030. We have Agenda 2030, and that's a time where we have to look what have we performed. So start with 3 crises that we have already had since 2000. We have the dot-com crisis in 2001. We have the financial crisis in 2008. So you see this negative development in world trade. We had a decrease during these times in trade. And then we have the pandemic. So the question is actually, what's next? It doesn't mean that we need to end up in a new crisis. But what we can have in mind is that during the pandemic, we have increased public debts in countries that already prior to the crisis had debts, public debts of more than 100% of GDP, big countries globally. Japan, US, in Europe, we have France, for example, but also in the southern part of Europe, like Italy and the other southern European countries as well. So we have increased debt with all these stimulus packages from the governmental side. And is this sustainable in the long run? We will see, because if this can help the economies to recover, we can get this back in taxes and activity as well, and that's positive for public finances. But it's also a matter of fact that we see that inflation is picking up. So that's, as I mentioned, what central banks are looking into. Could this be a catalyst for something in the financial market that means that we end up in some kind of financial crisis if central banks react more than expected? What could happen? But we also have other things. If we look into 10 years ahead, a decade ahead, we have this green transition period, the digital transition. We need a lot of investments, and it should be green investments, not brown ones any longer. And most are committed to green investments. It goes for the public sector and the private sector and the household sector and researchers. All parts or stakeholders are committed to the green agenda. But if we have the greenwashing, could there be a green? This is still possible, but harder and harder, of course. But could this mean that we end up with some kind of green bubble? We also have the superpower conflict between the US and China, not least when it comes to technical parts, emerging technologies, a tech war. If this end up in different digital structures, it will be costly, of course, for companies and societies if the US will have one digital infrastructure, China another one. Where do we have the rest of the world? So I don't think we will end up in this, but it's still a risk that we have to take into account. There could be other black swans that we cannot see at the moment. But for now, there are some risks that are more imminent. And of course, it's the spread of the virus. The pandemic is not over, so we don't know if there will be new mutations and if we need to put restrictions into force again. If there will be lockdowns, it could harm not least the service sector and global growth, of course. But another one that I think is really important to mention when it comes to risks to the global recovery in the short-term perspective is the supply chain disruptions that we see. This will, of course, slow production and trade even more that we have seen. So why do we have these problems right now? It goes for intermediate products and also semiconductors. It's higher demand than we have supply of intermediate goods and not least semiconductors. And we know that semiconductors are mainly produced in South Korea and Taiwan. There are some production in China and in the US as well, but most is actually in these two countries, Korea and Taiwan. So of course this green transition, demand picking up after the pandemic year, so demand is higher than supply, then of course we see problems for production, because if you don't get your intermediate products, the inputs to your production, you cannot continue with production. We also have disturbances in freight and container, and containers are spread out globally, not where they need to be. And also we have seen earlier this autumn the spread of the virus in not least Southeast Asia, where there were a lot of close downs in production, restrictions, not least China have zero tolerance for the virus, which means that if you close down production and harbors as well, you will actually have problems globally with the logistics, of course. And what about this? We know also that 90% of all containers are produced in China. We know that 80% of all goods are transported by on the sea, which means that if we have these problems for a longer time, it will mean that we have negative effects on production, on the manufacturing industries, and also when it comes to trade. And what you can see in the slide that you have right now on the screen is global goods trade, the yellow line, and you have the blue line, which is global industrial production. And this is an index where we put 2019, prior to the crisis, 100, and then you can see where we are right now. So it's still a good momentum. It's still over 100, but it has slowed down. And if this continue, we don't know where this will be. These imbalances are back, so we have more of a balanced situation. This could happen next year, but no one can actually really answer because there could be new disturbances coming in due to the spread of the virus and close downs and so forth. But if we look into it right now, we expect it to ease a little bit when we move into the next year. And we can also see this, that the prices, freight prices, for example, has actually is not increasing to the same extent as they did some weeks or months ago. So hopefully these imbalances will look a little bit better next year. But this is something that is important also to understand. Is this a permanent effect? Will we see increase in prices for freights and logistic chains? How will this develop onwards? Because this can actually feed into not just increased prices for producers, it could also spill over into consumer prices, and then central banks need to react on this. But not just the level, then it also needs to be a permanent increase in inflation, of course. So the other thing I would like to mention is, of course, the energy crisis. And now I focus a little bit on Europe. It's a global question, of course. Energy, we move into a greener world, fossil-free world. So we should adapt to this, but we still know that 80% of the energy that we use still come from fossil fuel, of course. So this transition means that we need a lot of investments into fossil-free energy, and it takes time. So demand, even in this case, is stronger or is above the supply that we have, which means that prices increase. You can see this in this graph. I just choose to have emission allowances within the EU. For the green transition, we see that these prices are increases. You also see it for the natural gas, because if we do not have enough of fossil-free, it moves to natural gas. And in Europe, Germany, the largest economy or the biggest economy in Europe, 27% approximately of the GDP in the Eurozone. Germany import about 40% of their energy, natural gas, that part from Russia. So this means that we see all these pressure upwards on prices. So looking into the futures, energy future prices, we can see a slowdown. So hopefully this will clear out a little bit as well. But we will have a volatility in energy prices for a long time, I believe. And this also goes into consumer prices towards the end, which means that central banks are looking into this as well. And then look at the CPI figures, consumer prices, and I just choose some countries here just to compare it. So we start with the US, and inflation rate right now above 6% is quite high. And then we look at the Eurozone as well, Sweden, UK, and Germany in the picture. And you can see this, that it's far above the inflation targets that we have corresponding to 2% inflation targets, which means that central banks are a bit worried and ask themselves, is this temporary effects, pandemic inflation related factors that put inflation up at this level, or is it more of a permanent upward pressure on prices? Personally, I believe that if we should have a permanent increase in inflation looking ahead, then we have to see also that the labor market will tighten even more, and that we will see a wage increase that will be permanent, we can see tendencies of wages picking up permanently more in the US than we can see in other parts like Europe and Sweden as well. But if we will take energy away, energy is a large part of inflation, of course, then it's not that bad as you can see in this slide. But this is something that we follow very, very closely. I still believe that we will see some of this is, of course, pandemic related. We have a very strong demand and limited supply. So we have supply side problems into our economies, and we have this very, very strong demand when we open up our economies, even though we will now maybe go back a bit, not least in Europe, with more of restrictions that could, of course, dampen the inflation pressure a little bit. But I truly believe that we will have a lower inflation onwards, approximately in Europe and Sweden, about 2%. That's the best forecast we can do at the moment. But we have to follow this, as I said, very, very close. Because if we end up in a situation where inflation will continue to increase, then central banks need to tighten their policy earlier than they communicate today. And this will, of course, have a negative effect on growth and also on investments. Uncertainty is, of course, very important for business and investments. So the fourth risk that I would like to mention above the pandemic per se, increased spread of the virus, is the dampened activity in the Chinese business sector. Because China is such a big player in the global economy. So if it slows down in China, the activity, of course, this will have a strong spillover effect on the global recovery as well. And we have seen this in the service sector, in the manufacturing sector. And of course, due to zero tolerance for the virus, of course, this is one effect, but it also in the real estate market where there are some challenges in the Chinese market. It's quite a big part of the Chinese economy. If I remember correct, about 30% of the Chinese market is actually connected to the real estate market. So this means that we could see effects onwards, and also the rebalancing of the economy in China, moving from investment-led growth to more of consumption-led growth. This will, of course, also have an effect on the growth figures for the Chinese economy. And also the transition to combat the climate change, of course, and energy. And at the moment in the Chinese economy or in China, there are some restrictions on energy as well. And if you don't have the energy for your production facilities and have to close down, this will have an effect as well. But it's still above 50. 50 is the mark between optimism and pessimism. So if we have a figure of about 50, we still expect a healthy activity in the economy. So then it's fine, but we don't want to be below the 50 mark. So these risks is something that could harm growth in the more short-run perspective. Otherwise, we do have, as I mentioned, the superpower conflict between the US and China, very much into technology, if we could call it a technology war between the two superpowers, emerging technologies like the AI, quantum computers and robotics. How will this play out in the future? Will we end up with different digital infrastructure and then we will have quite a bad situation. But hopefully we will find a way to adapt to this situation. So, moving on to effects on Sweden, the Nordics, and Europe. The first map I showed, if you remember, you could see that the Nordics in total have performed better than their peers in Europe, in other European countries. And we can look back to this and just zoom into Europe and the Nordics, and you can see that the Nordics are in lead already this year. All 4 Nordic countries, Sweden, Norway, Denmark, and Finland, they are back at pre-crisis levels, 2019 level of GDP, or even more. For Sweden, we are back on more or less all macroeconomic factors that you can look into. And why this? Of course, it depends on the spread of the virus in our economies, coverage of vaccination, and also fiscal policy measures. How did we handle the situation in our economies? And we do have very strong public finances, so it has been possible for all the Nordic countries to put a lot of measures into force to help the economies. And also, as I mentioned, all the Nordic countries, small open economies, are dependent on the global economy, and therefore it's very important that we do not have extended disruptions in global trade. And global trade has performed quite well, even though we have these supply chain disruptions right now, and which harms production, of course. This has continued, so that help, of course, for the Nordic countries. And then you can see the other a little bit closer for Europe as a whole, like Spain, for example, was hit very, very hard during the pandemic, so it will take longer time to recover. But next year, we will see that all economies within Europe will be back at pre-crisis level, at least, or some even more. So looking a bit closer into the Nordics and the public finances. I think this is an amazing situation that we have. You can see all the 4 Nordic countries, their public debt as percent of GDP. So you can see that it's quite low. It's a bit higher in Finland than the other countries, and I'll also put into this graph the debt level if you take the whole Eurozone into account, and also compare it to, for example, the US, where we see quite a high level of public debt as share of GDP. And of course, in the long run, this could be a problem for countries having high public debts. And for the Nordics, it's not the case. So it's still room for fiscal policy measures if needed. So that's a strength of the Nordics, and also for our society as a whole to be able to put structural reforms into force, because that's what's needed right now to move into the future. We do have to invest still even more in digital solutions and also green solutions to combat the climate crisis. And we do have in Sweden, in the Nordics, in Europe as a whole, companies in the forefront when it comes to solutions, sustainable, innovative solutions that we can bring out even outside Europe. So this is a good situation, and the 60 mark is just what is allowed within the European Union when it comes to the public debt as percent of GDP, but it's still higher for many countries right now, like France above 100, Italy, and some other countries as well. So the Nordics have performed better when it comes to public finances. So then if we look ahead a little bit to see what trends do we have? We have a lot of fiscal policy measures. The crisis policy is behind us, so now it's moving more and more globally, and not least within Europe, into more of measures that point more on the structural things that we need to solve, like moving into a digital green society. Look a decade ahead. And the focus globally is actually on the digital decade. The Agenda 2030 is here, and now we have to deliver. We have to speed up. We know what to do, and it's just to focus on trying to speed this up with permits and building for the society with electricity infrastructure and so forth. So we also have a decade ahead where we focus on a sustainable action. This needs to continue, of course, after 2030 as well, but this is a focus that we have right now. And also innovation. Innovation is part of this, so it means that we need to take risks. We don't actually know how the new business models should look like. It should be moved from these more of linear business models where you produce, consume, and then throw it away. But now it has moved into more of recycling, but we need to take a step even further so we can have these circular business models where everything, the whole supply chain, goes into one business model. So we recycle everything, and then you need to think in new ways. So that could be more of the transformations. These are not new transformations. We have just speeded this up a bit during the pandemic. Digitalization, for example, that was an advantage for my own home country, Sweden, of course. To be highly digitalized in your society means that it was easier to combat or handle the situation during the pandemic, because you can move a lot of things over to digital solutions and distance working, remote working as well. So then you can keep up, and you can also use the internet to do your shopping as well. So that's an advantage, of course. So this has been with us for a while, but it's moving faster right now. And also sustainability is not a new phenomenon. It's something that we have, but hopefully we can speed it up after the COP26 meeting in Glasgow recently. And innovation is also part of the solution. So take on this risk, do these necessary investments. But I also pointed out some trends that we have seen also prior to the crisis, where we see that the shifting point of gravity. By that said, I mean that we see that economic power is moving more and more towards east. Today, we have the largest part, more than half of global GDP in North America and Europe, but it's changing, and the Asian Pacific region is gaining ground. So we just a few years ahead, we will see that they will have, or this part of the world will have a larger part of the global economy. And we have seen historically that with economic power, also political power follows. So that's why we have this tension between the two superpowers, but others as well, of course. So we need to find allies, of course, and then we have more of a policy-driven economies that goes globally as well, and this was strengthened during the pandemic, and moving more into industrial policy, and we have a more weakened World Trade Organization, and we see more of protectionism globally as well. So more of policy driven, and now we also see actions by the politicians. So it needs to go hand in hand with business, of course, policy and business for this innovative landscape that we see ahead for the digital and green transition. And the emerging data borders, that what was I mentioned when it comes to digital solutions. The best situation is, of course, if we have one digital infrastructure for the global society, of course. But we will see where we end up with this. And these new competitive ecosystems, it's to show that you need to think in a bigger context and actually see how you can collaborate, if you should move over to more circular business models. You need to interact with suppliers, maybe broader than your own sector as well, to see the whole ecosystem emerging and how they align and go together with other ecosystems as well. So the business ecosystems and supply chains, we see it's moving more and more to be regional. We still have a global economy, but more and more of regionalization, and not least when it comes to the multinational companies. They are all present in the 3 production regions, North America, Europe, and the Asian Pacific region. They could also be in other parts like other regions like South America, Africa, and the Middle East, but they are still a smaller part. And the regionalization drives by, or are driven more by being close to the market and adapt to the market, the requirements from customers, customize it even more. And circular thinking means that you also need to look into the vulnerability in your supply chains, and you need to secure that you have sustainable supply chains. And today, companies look more into these factors, and market policy are driven more than choose to have your sites production in low cost markets, because labor is becoming less and less part of the whole production. You use more of robotics, autonomous thinking in this context. So it means that it has not the same advantage to locate in low-wage countries today. Other factors are more important, being close to the market and customize even more. And then we have the servitization, of course, selling more and more as a service. Customers are asking more for the service than the product per se. Could take an example. If you have a crane in a harbor, instead of selling the crane, you can just sell the lift and the customer can pay per ton. Just an example. Could be buses in a city as well. A country, if you don't want to invest in the buses, you invest more in transport and pay for the transport. Then you can reframe your business models and probably move it into more of a sustainable business model that is circular. So it's changing. So more selling as a service is of course not for all companies, but moving into this, take advantage of digitally driven platforms, emerging technologies. And the last one, of course, is that customers require more of sustainability thinking and also to customize what they everything that they demand. So more conscious and connected consumers globally. So what do Sweden, Europe, the Nordics, if you like, what would we actually need to do to succeed or being part of the new business landscape that we see, and the digital and green transformation? What do we need to secure? I should say that it's 4 pieces that need to be in place, and we will have a look into this. So I choose to have Sweden and Europe, the way forward. What do we need to do to be part of the solutions to create a better world for all? Of course, education and skill, talent. That's also a global challenge, of course. We need competence, not least within IT, digital competences. We need engineering competences, but we also need people that can think in holistic ways. So that's something that we need to solve, not least in Europe. The second part is infrastructure. And now I'm pointing more on the digital infrastructure. We need to have or try to move into more of standardization, so we can actually communicate in a smart way. To scale this up, we need to have the infrastructure in place and roll out the 5G solutions in Europe. We are a little bit behind to actually take part of the solutions, the technical solutions that are in the market, and then deliver on this and find the solutions to moving into a digital driven society with smart solutions. And servicification, I mentioned this, so more as a service, then we need to be able to move freely, and that goes for data and also people, of course. So this is important as well, and it's not just for Europe, but we have the internal market in Europe, and we need to start with our own, so to say, home market before we can actually engage fully globally. And the last one is the green transition. And then we need to secure that the green or the electrification, to be part of this, we need to have the green infrastructure energy system in place, so companies, households get access to cheap green energy. Otherwise, we are not able to adapt to the electrification and green transition. So that's really important to speed up this, so we secure that we have the energy system in place. So the last words is actually to let Sweden and Europe be the catalyst for the green transition. We do have a lot of sustainable, innovative solutions, both when it comes to digital solutions and the green transition, climate, the climate challenge, solutions on this within transport, batteries, and so forth. All this is in place, and we need to bring this out on the market as well. But of course, we cannot do this on our own. We need to collaborate, we need to co-create, not just in the Nordics, in Europe. We need to open up and collaborate and co-create globally. So please join us to help us to create a better future for all. Thank you so much.